following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 5th. No, it can't be March 5th. It's got to be March 8th. That's right, the March 8th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets. We're going to go figure out what the bulls and the bears, the buyers and the sellers, what they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. More importantly, I am here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show kicked off here on this Turnaround Tuesday. We'll see if, in fact, the markets are going to go ahead and turn around. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading off 29 points. She's trading out at 17,045. S&P down 11, trading out at 1990. NASDAQ Composite off 27 points. That's trading out at 4681. Russell 2000 down 19 points, nearly 19 points at the moment, trading at 1075. So weakness there. Gold is flat. Silver is down 20 cents. Light sweet crude is back $1.30. Leading the charge here to the upside, dollar-wise, individual stock. You've got O'Reilly Automotive up 2%. That's $5 and change. You've got Google up $5 and change as well. That's less than 1%. Urban Outfitters up 17%, up nearly $5. To the downside, Sam Adams, Boston Beer, SAM is the ticker symbol, off about 23%. Oh, that's a big hit. Volume today, 227,000 shares. Not sure if that's heavy volume. I would imagine that it is, but we'll go find out. Virtus Investment Partners down about 13%, off $12. Regeneron Pharmaceuticals down 11. So where do you want to begin? Where do you want to begin out there? You know, the battle that's going on today, really similar to what you and I took a look at yesterday. I wish I could tell you something different, but as we speak right now, I really can't. So let's go with the battle here. The divergence is really between the Dow, and it's off 30 points here, but it's relatively strong, although it actually has some weak. So strong in price, strong in where it's trading, but weak under the covers out here, whereas the NASDAQ has just been playing out basically weak. Well, that was until this morning. If we take a look at that 30-minute chart out, let's go ahead and put that up on the screen here. What we're going to notice, I love the pattern. You know I love the pattern because you love it too. What we notice here is as price was moving down into the 5:30 time frame this morning, at 6 o'clock you had that little piercing candle bullish reversal signal. Price was moving lower, doing it with what? Less relative weakness out there. Price has been able to get above its, this is a 30-minute chart we're looking at, get above its market profile resistance zone that was out there. It did that at 7:30 this morning. We had a new box appear, so we had a new level of supply and demand. That came out at 9 o'clock this morning. Price is up against that resistance level. So unless we were to see price close right now back below 42.66, you could say turnaround Tuesday should continue because the weak link here is actually the one that gave you, and that's what you're looking for, right? The weak link here, now it's a 30-minute chart that we're looking at. The weak link here gave you an indication that the selling was over for the moment. Now, if we step things up, which, of course, we always have to step things up around here, we've got to go take a look at the daily chart and say, so what does that 30-minute chart really mean? And when we take a look at the daily chart, you would have to say, not much. Actually, you'd have to say it's nothing more than the intraday trading of the bulls and the bears out here. If we take a look at the daily chart, not until you see, I see, we see a price close above the level of 43.58 is what we'll call it. Is this market going to move higher with any kind of conviction? So really the NASDAQ, you take a look at the body of the candle, the true essence of price, it's done diddly. It's done less than diddly out here. Now, what it is doing, it's holding levels of support. When we take a look at levels of support, we take a look at both the daily and the weekly point of control, the level where buyers and sellers seem to be most comfortable in price. And that shows up here between 42.79 and 43.01 on our chart. We're trading at 42.92. So it's just really kind of hanging out here, not doing a whole lot. However, not doing a whole lot can mean a couple of things. When we take a look at this specific chart, that's what we want to look at. So it's going to mean different things on different charts out here. You can see we had this nice little upthrust. Am I able to say upthrust on the radio? I think so. We had that nice little upthrust on that nice wide-ranging bar on March the 1st out there. And then we're now in day number 5 of nothing more than just a slight small-bodied candle still trading with inside this candle. You know, most of the candlesticks, Japanese candlesticks that you and I take a look at out here, most of them are either bullish or bearish. They're reversal signals. We've got 2 that we know are neutral, with the exception of the doji. It's a neutral candle unless you're up at resistance, right? So 2 of them are neutral. And then there's really only one true continuation pattern or candlestick in Japanese candlestick charting. That's called the rising 3 or the falling 3. Well, right now we would be dealing with the rising 3. Now, they say, you know, technically speaking, that you should see price travel with inside the body of that candle. Do it, you know, for about 3 sessions, then move to the upside if you're going to have a rising 3. The reality is it's more than 3 sessions. It's not really 3 sessions. And at this stage here, so if you clear the TAS market profile high, that's at 42, it is a 43.58 out there, that would be giving you the go-ahead signal, just as, now the way that conservative, in this case here, we see that the market closed in essence at its highs out here. So we don't really have to worry too much about the wick. The actual high of that session, 43.3875. The close was $1 below that, 1 point below that. So any move, any close above 43.3875, now, it doesn't go on forever. So, yeah, you don't have to do it in 3 days. 7 days, 7 sessions is, is kind of pushing the outer limits out there. We're in 5. You typically see about 5 of these days, and then you've got, if in fact this is going to be a continuation, a move higher, a blast out of that level. So, again, not saying that's going to happen. We just know what to be looking for. You see it get above that, you've got all signs point to, especially if you're a short-term trader here, you better start looking to the long side. At this stage here, though, now the question is going to be able to pull that off. And it has the opportunity to do that until we see a close well below. You'd almost have to say a bit of change in character here if you were to see a close below 41.89. We're not there yet. Okay, so that's what's going on inside the NQ. If we go back and take a look at the Dow, now we'll look at, instead of the Dow future, we'll just take a look at the Dow Jones Indice out here. We took a look at that divergence yesterday. It's here today still, and that's that descending advanced decline oscillator out here. Not below zero. Printing out at 1.14, so still above zero, still bullish, really, but it is a sign of potential trouble out here. And this is, you can see, it's not much off its highs from yesterday. Take a look at that candle. No real big deal, right? There is a big deal below the covers. We just don't know when those covers are going to get washed. Steve Rhodes with TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the, tell you what, we have the Dow. There we go. We've got the Dow trading up about 30 points right now. S&P down 11. So we've taken a look at the NQ. We've taken a look at the Dow. We really need to see signals there to give us a really good clue, in my opinion, as to what the market wants to do. I was just during that break there, really towards the last 15 seconds of it, was trying to take a look at just putting up a correlation chart here. I had some internet issues in the morning, so I've been fussing with my system out here, and but things, hopefully they're back up and good here, at least for the afternoon. What I was trying to do here, the top portion of this chart is the ES Mini. The bottom portion is gold. Let me, instead of have those, I want to do this. I want to just change this to line charts out here. Now there's going to be closes, but that's still okay. It's a 5-minute chart, so a really short-term chart, so that's not a big deal out here. And just looking for whether or not, so what we can, just trying to see because the correlation, here's what I really was looking for. We've seen where when the stock market goes up, gold in essence moves down. So I'm just coming back here. So just as an example, if you're following my cursor, there we go, just kind of equal. So right here, the top portion, let's do this. Let me make it easier for you to follow. Let me turn the line on the gold chart to why don't I turn it to gold? That would make a lot of sense, wouldn't it? Okay, so now we've got gold on the bottom portion of my screen. We've got the ES Mini on the top portion of my screen. And just looking to understand this correlation. So here, when you've got the market going up, the ES Mini going up, we had gold doing what? Gold moving down. We got the market moving up. Gold moving up, the stock market moving down, the ES Mini. Kind of have this flat section in here. We have the ES Mini moving down. That's the blue line. What do we have gold doing? We've got gold moving up, right? So we can see that correlation. Now that correlation, in essence, if we pull this back out here, it's been fairly consistent. Here, if you take a look at gold, this was about 4 in the morning on March the 4th. Now, obviously, we can change this and do longer term time frames out here, but you think you're going to get the gist here. You've got the ES Mini, in essence, moving higher. You've got gold moving lower. Gold then moving higher out here. The market doing what? Moving lower. So we can see that correlation that is out there. And why is Debo even spending time with you on this? Well, because it looked to me this morning as my internet was going in and out, as I was keeping one eye on that and another eye on my fist, which was pounding through the wall. And I don't really do that. Was just considering, again, hosting the show from Starbucks out there, or Panera Bread. But it looked to me like that correlation for the moment was starting to separate. I don't know if it's for a short period of time. So that's why I wanted to put this up on my screen out here. So here you can see, and this is at about 8 o'clock, 9 o'clock this morning. And here we've got the market moving down, and we have gold moving down. We have the market moving back up on this counter trend rally, and gold, in essence, moving up at this stage. And so when we start, and the reason why is it that I'm doing this? Well, the reason that I'm doing this is because, one, I am anticipating that that gold's going to freak everybody out. You're going to see gold take a hard dive to the right, a hard move to the right out there. That because there are the boat is going to get capsized basically. So I hope that you're wearing a life preserver out there. Now I've been saying this for a while here, so you could almost say I'm underwater. That's not really true because you can see that as long as I have been saying that, gold hasn't really done anything. It's just been out there. It hasn't been moving too much. What do I say moving too much? Remember we looked at the NQ, we took a look at those small-bodied candles trading inside of the larger candle. What gold's doing the exact same thing, only a little bit differently. Here's the wide-ranging, here's that wide-ranging bar from the trading session of February 11th. Now, granted, we are slightly above that level out here, but it really hasn't done a whole lot for several weeks out here. Here's where it did a bunch off of the December, January lows out here. That's where the move is. But at this stage here, it's just been basically pulling people back in. So I'm looking. The reason that I'm looking at this is I'm anticipating gold moving lower. And so that was saying, okay, so that doesn't mean I have to justify the market moving higher out here. Because if that correlation that we've seen here for a while is going to go ahead and stay in place out there, that's in essence what that would mean. And I don't know that I have more of the interpretation, quite frankly, that both are going to start moving in the same direction out here. So I just wanted to, at this stage right now, if gold closes below the weekly market profile high of 1264, you're going to see gold trade all the way back to 1162 or even lower out there. But that becomes my next target to the downside. And at the bottom, so here's the other thing. At the bottom here, inside of gold, it was the equities that were giving us the biggest signal. The largest signal that gold was going to start moving higher, quite frankly, well, it's coming from the group called the commercial traders, the big money traders inside the futures market out there, and it was really coming from the equities themselves. And if we go take a look at the equities themselves, or I just take a look at the XAU, I had posted this earlier out here. Like if you listen to this show, we take a look at topping patterns and bottoming patterns that occur all the time, right? All the time. We look at it on different time frames. We just looked at the 30-minute chart here for the NQ, and we saw where prices moving lower, doing a less relative weakness out there, and did what? Found a bottom. Right, you and I, we can get rid of the emotion. We can just pay attention to what it's doing. Now we don't know where things are going to go ahead and bounce to. We got to use other tools. In this case here, we're looking at the XAU. What do we have? Price move higher, has done it with less relative strength out there, and today you're getting at this stage here. Now it's 124. This is not going to confirm until 4 o'clock. But at this stage here, you got a nice big old bearish engulfing candle. You got a seventh inning stretch out here. You've got everything that would show you the sign of a topping pattern. That says the boat is about to get sunk. The boat is about to get capsized out there. Now, look, it's like any other trade. I don't care what pattern that sets up. You still have to be smart with regard to stops and exits and things of that sort. So that's why I was actually doing that during the breakout there, to really go ahead and figure out, because at this stage, I also believe, as we speak, that that there's a big message here in the NQ that has not been able to take out those highs. What does Tommy like to say? If you can't bust them up, bust them down. Well, folks, it doesn't get any simpler than that with regard to meaning out here. If you go take a look at these four futures indices, there's no question that the NQ has not been able to bust them up. It has been sitting here for 5 days. 5 days. Maybe it's going to sit here longer, but I can tell you one thing it can't do, or it hasn't done. It hasn't busted them up. So that says, all right, to me, and with what I'm looking at in the Dow, it says it's going to go ahead and bust them down. Now, it's easy for me to communicate this to you because yesterday afternoon we were long, my clients and I, we were long the market. We went ahead and closed that out and took the profit off the table. But and so when you're neutral, boy, you are really clear-headed because you can come in and you can take a look at both sides of the transaction. I'm neutral right now with regard to a trade in gold or the miners. So I'm just looking for the signals, putting those pieces of the pie together out here. Today, maybe it'll be a key line pie as we put together all the key pieces of the markets. So when we get back, let's go take a look at something else. I probably bored you to death out there, and let's try to not bore you with the next thing we look at. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 23. S&P is off 10 points. NASDAQ Composite down 19. We probably had to check in on the Russell 2000. So it's off 16 points today. We know the Russell has been, pretty much on fire. Those profiles aren't going to mean anything on the indice out here. Let's take a look at the IWM itself and see what we've got going on here, volume-wise, pattern-wise, and so forth. So if we look at the A to B equals CD pattern out here, our nice little lightning bolt, we know we've got a B point. from February 22nd. Volume there was 28 million shares. And as this B point was being passed, it was done with 27. That's good enough. 32, more than good enough on February 29th. So you have, in essence, what we like to call a confirmed A to B equals C to the upside. It fulfilled that objective by at least making it to the 1-to-1 level, which is 107.34. You got slightly above it yesterday. Your close was 108.89. In essence, it was running right into the bottom of its TAS market profile. We can go ahead and turn off the A to B equals CD. Let's do that just to clean up the chart just a tad. So let's get rid of the A to B equals CD pattern there. That cleans it up a bit. We know we have a brand new daily profile. The top of the box is 104.59. We are trading right now at the top 104. No, yeah. Wait a minute. Okay, both the bottom and the pointed control are at the same level, 103.33. So we don't, but it is a brand new box. That says the IWM ought to have really strong support at 103.33 out here. So we've got that pattern that is complete. You've come up to resistance out here, and it's doing that at the same time. On our 5-hour energy drink chart out here, we got to that good old famous 7th inning stretch wave count out here, and that happened at about 6 o'clock last night. And ever since that stage of the game out here inside of the Russell 2000, the TF, this is the March contract out here, we have seen price move lower, and price right now is trading below the bottom of its 5-hour chart. Now let me confirm that, because sometimes I get a little bit different signals here on the on that trading package versus this. So let's go ahead. We will rely on e-signal out here. There we go. Okay, there we go. So let me put this up on the chart. So I've got the bottom of the daily. Yeah, so it's trading right now really right at the bottom of its box. So if the Russell 2000 futures contract closes below 1076.94, or 1076.60 as we speak right now, that too is going to be giving us a signal of a likely change in trend out here. You see, coming off of the bottom, off of this most recent bottom from back here on February 24th, inside of the Russell, we haven't seen any closes below the bottom of the support level. So that would suggest that support is failing. So we know we've got a 7th inning stretch there. We've got the NASDAQ that can't take out the highs. We've got the Dow that's got a divergent pattern that says at some point in time, unless the markets just really take off to the upside, you've got to be careful. So now we've got 3 messages, right, from 3 of the different indices, and take a look at some different time frames out there that got me being cautious. So what's the real key today? That's a great question. If you could just hang your hat on one thing, what would it be? For me, it would probably be looking at the VIX index, and it would be saying if you see the VIX index close at 1837 or higher, right now you're 1797, so you got about another 40 cents out there. If you see it close above 1837, you probably have the signal that you're going to see a top or some type of fairly decent retracement in place inside the markets. You never really know which one is which, and that is where I would likely hang my cowboy hat. All right, so let's go take a look at some other things in the market. So that really just sets up the stage where Stevie's having a real difficult time finding reasons to be bullish this market. You kind of get that? I have no reason to be bullish gold, and at this stage here, very few reasons to be bullish the market. Now, maybe there's one reason, but let's go take a look. Let's take a look at light sweet crude. This would be the second area where I would probably hang my hat out here. So we see light sweet crude is pulling back today. Ran right into resistance, right? Nice move off of the bottom out here, February 11. And it has moved right now into some major resistance out here, and that is the bottom of its weekly box. And because of the just simple directional correlation that exists between light sweet crude right now and the S&P 500, and I'll be glad when that goes. Maybe I won't be glad when it goes away, because it's nice to have some additional elements that we can go to. So price ran into resistance, right? And at this stage here, you do have a little dark cloud cover candle that is formed. If we see a close, and I've got this little consolidation box drawn in there, but it's not necessarily exact, we'll go ahead and use that market profile. If we see light sweet crude close today between below 3063, we'll in essence have a failed breakout. And what would that say? That says you move back to 3346. You move back to 3063, and I'll go with the ladder there, 3063. So we've got the markets, the indices that are saying you got to really be cautious here, my opinion. You've got and I've given you the number on the VIX out here, and I say if gold not gold. If light sweet crude closes below 36.28, is that the number I gave you? I want to make sure. 36.28. Sometimes I get my numbers confused out here, but 36.28 is a number to be taken a look at. Now, if it doesn't close below that, we could see light sweet crude trading anywhere between there and 38.50 for a while. And if it gets above 38.50, 41.82. So that's a 42 to 43 level that we talked about on the show. But at this stage here, it's met with resistance, and you've got two levels to be watching in the case of light sweet crude. We take a look at some of the, let's take a look at a couple of the gold indices out here. Not gold indices, gold equities. Let's take a look at Agnico Eagle, AEM, 2 million shares to the downside off 94 pennies out here. Well, here's our profiles. So let's figure out what we've got. So we know that yesterday, we know that AEM made a high February 24th with 4 million shares. And 2 days ago, tested and rejected it with about the same volume, a little bit higher volume, so 4.3. And then yesterday, tested it and closed inside. When I say closed inside, closed below the low, closed above the low of the trading session from February 24th, which was 34.86. Now, yesterday's test was light volume, 3 million shares going against 4 million shares. When the last time up was the prior day with 4.3, right? So it's losing the gusto. It's losing the strength. Of course, we've got a nice bearish engulfing candle today. The move lower so far, 2 million shares. Now, what is that doing? That's pushing down into this little swing point here on March the 2nd that only has 3 million shares. So if I put up my trusty calculator, boy, I almost hit it to the T yesterday. Of course, when you say you hit it to the T, you might be on a T box, and that means you kind of whiffed at it. But no, I almost hit it to the T, meaning volume on the Qs that we estimated. I'm trying to stall. I'm trying to do two things at once out here, and I'm basically very unsuccessful at it. I try to pull up that calculator, and we basically did about 25 million in the NQs out there. So now let's just go ahead and take a look at the volume metric out here. Give me a moment to do that. You'd think I could do it off the top of my hand, but top of my head out there, but I can't, and nor do I want to. So, okay, you've got volume at 2 million shares, and we've traded in essence, we came on, so about 4.5 hours, yeah. So volume today, only about 2.89 million shares. So today, any close below that low of February 24th, 34.86, and you're going to have a failure on price and volume inside of AEM. One of the stronger looking gold stocks that are out there. Steve Rhodes with TFNN. Dow's out 14, S&P down 8. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off about 12 right now. S&P is down 7. Let's go surfing around, take a look at a couple of equities out here, see what they're doing. Let's start off with Sam Adams. Let's go have a beer out here. It's on sale today. It's down about $24, 11, 12%. Has volume behind the move so far today, about 256,000 shares. So let's go see what it's doing. It does have potential support. Last time that the price was down in this range was back here on February 19th, and it had about 400,000 shares for the day. So at 256, with the amount of time that has elapsed out here, and knowing that volume was probably pretty heavy in the early part of the session, volume is actually not too bad, about 369,000 shares. Again, last time down here was back on February 19th, and that had about 400,000 shares. So similar probably to what today holds. Let's put this on a weekly basis, see if we get a feel what this equity may be doing out here. And if it does not hold, let me do this. Let me turn off these profiles here for a moment. We'll just clean up the chart. There we go. So this could be a confirmed A to B equals CD to the downside. Let's go ahead and check it out. We're looking at swing points here from the week of August 24th. Well, that would make sense, or August 31st. So you've got 940 or 728,000 shares. And when that level, oh, you do. So Boston Beer, the actual longer term pattern that's inside of Sam Adams out here looks like this. So your A point is all the way out here from January 2015. Your B point, that's clear. It's going to be the August 24th low, or it's going to be the following week. Either one, it looks like they're about the same price. And then a little retracement up here into October, middle of October. So the 1-to-1 A to B equals CD pattern is about the 131 level out here. And that would seem logical because there was a nice breakout inside of Sam Adams back during the week of December in 2012. Now, that doesn't mean that 130.78 is going to hold that support, because the breakout really took place from the bottom of that session around 112. So you'd have to say that Sam Adams very likely headed down into the 112 to 130 area if we take a look at the lightning bolt. Let's take a look at Virtus Investment Partners, I think. Might have got that. Let's go see what this is doing. Now, this also, we'll stay with the weekly chart out here. Get a feel for what this might be doing. So there's already an A to B equals C to that it has at least completed. So just my apology, I'm just kind of surfing around here. So this thing is really up against what should hold as support. Should hold as support. But for the week already, you've got volume of 647,000 shares. And last time down here, you only had 517. So should hold and will hold. Two different stories out here. This means that this could get down to about the $48 level. and it's $85 as we speak right now. That means cut in half from where we're at, but that means back here in 2013 it was about $250 out here. Question about Valley, V-A-L-E, Valley Girls out here. Let's go check it out, V-A-L-E. Now this thing came up off the bottom very nicely. Wide price spread, accelerated volume. You got to like that. That was last week. Volume of 275 million shares out there. So that's the weekly chart. Pulling back here. Today's Tuesday. Phew, you're pulling back with a lot of volume. 122 million shares versus 275. We're not even halfway through the week out here. Let's go take a look at the daily chart. Let's go see what that breakout looked like and what is happening. So VALE is the ticker symbol that we're looking at. Just want to take a look at the wave count on a different screen for you. See how when price was moving up, we have any, no, so we're looking, I guess, okay there. Yeah, give me a moment and then we'll come right back to it. So no, okay, no wave counts to be concerned about. So this thing, the breakout took place here on March the 3rd. 76 million shares to the upside. So far today, 41 million shares. So that looks a little bit better in that you're going to do volume today of about 41, roughly about 60 million shares. So if we were to take a look at, Mike, are you trying to get into this? Do you own this? Give me a feel, just really speaking by voice into the Tiger's Den, but Mike would have to go ahead and type into the Tiger's Den what it is, the reason why he's asking me to look at it, and then I can even be more assistance out here. So today, small position, want to add. Okay, so you want to add. If you're taking a look at market profiles out here, which we are, brand new box that formed today. And that says, so you've got a new demand area, supply and demand, right? So the bottom of that box is at 401. And so if you were looking for a place to add, this would really be it at 401. Would I recommend adding here? No, probably not, because it's a brand new box today. And I would also say at that 401 level, if you were to see a close below it, and right now you're trading at 405, so you got 4 pennies to deal with here. If you get a close below that, there is nothing to stop this equity from coming all the way back into the 280 area. That would be a nicer place to add than at 405. It is lighter volume, but it's still. You can watch what happens at this 405 level to see if this will really hold as support out there. So you're already in a small position. I don't know how far down that where you're at. So hopefully you're adding to the small position, and you're already in a profit inside of this. Now the other thing, if we're anyone know aside for iron ore price talk, okay. Give me a moment here to go from the swing point low to high. Just looking at retracement levels, 319, is a spot. But you've got great information today. I tell you what else we could, maybe we could do is, I don't know if I'll get much information on the 30-minute chart. Let me put a 10-minute chart. I know what I could do for you. Let's go take a look at a shorter-term time frame and see what VALE. Let me see what our market profiles might be doing on this time frame out here. Let's go see where the selling, where we're really going down. We're really cutting into this thing here. At this, I'd really have to do not too much work, but I'd have to spend more time than the minute that I have, minute 20 seconds that I have left on this. So yeah, I say just watch 405. Just as if you were in LA or San Diego and you were going to take the 405, is it? Yeah, I think does that run all the way down to San Diego? I think it does. Anyways, a lot of jabber here, and I know you want more information. So let's go back to the charts out here. That was on VALE. Let's go back and take a look at, what else do we want to look at here? Moving to the downside. Let's see, percentage-wise, big mover here, other than Nugget. Performance Sports Group. Wow, PSG down 64%. I hope nobody out there owns this equity. Performance Sports Group. Let me put this on a long-term time frame. Maybe nobody in this equity that's in a winning position. Oh, how about that? Nobody in this equity. I talk about a pump and a dump. Now I'm just saying, I don't know if that's the case out here, $22 stock. But what we do know about Performance Sports Group is there's no party going on out there. You can see this in a monthly chart. And, maybe one or two investors or shareholders may, in fact, be in a slight profit position, maybe like about a penny. penny or two out here. So not a good looking equity out there. So we got the Dow down 24, S&P is off 9, Composites down 16, Russell 2000, it's off 15 points out there. Gold's up about $2. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's down about 34 right now. S&P is off about 11 points. Let's take a look at some things moving here to the upside with the last few minutes. Oh, somebody said I wanted me to look at XL something. XLU. So let's go take a look at the XLU out here, see what it's doing. It is trading up about 38 cents, 11 million shares out here. Now, very strong. Let me do this. Let me switch to a different set of charts. Give me a moment to do that. I believe that today it is now passing a 7th wave. I can't recall off the top of my head. I wish I had that type of command for all the different charts that I look at. But I don't, and instead it's pretty easy. Let's just put that chart up on our screen. So today it actually took out a seventh wave move to the upside. In this case here, it's labeled as G. So that took place right out here in the trading day of February 25th. Now, when those patterns fail, right, we like to say nothing more bullish than a failed bearish pattern out here. In this case, this happened to recycle just today. So, hey, how about that for the memory? Not too shabby out there. Now, typically you see, let's just take a look at what the XLU is doing out here, get a feel for where it's now potentially moving to. So if we take a look at its last swing point, that happened to be that seventh wave, that had volume of, put this up here so you can see it, volume of 12 million shares. That's in that data box, very bottom portion of my screen out there, 12 million shares. And today you've done 11 million shares. So you have another confirmed A to B equals CD to the upside out here. And what I would do, where I would take that one from, you've got two different potential patterns. So here's the A to B equals CD. I'd come down here to January 20th low. I'd come up to that high out here on the February 25th. I'd come to the bottom of the hammer on March 2nd. And 1-to-1 says price projection of about $50.11 to maybe 51. That's one pattern that you have out there. You've also got what? You've got a consolidation. In essence, that was broken because we had, in essence, a double bottom-ish type test. We know that it was a double bottom because that high has been taken out. And so what we will do is say, here is our consolidation. So you've got your measured move. I'm just going to take that box and put it to there, and that's going to give us the same move, right? So it looks to me like XLU, as long as it, the XLU is giving you a confirmation that it wants to move to the $50.11 area there, and that's just taking a look at a couple of different patterns out there. Let's look at one more. Well, let's look at whatever we have time left for, but let's go take a look at, where was it? We had an individual, O'Reilly Automotive, up $4, a little $4 and change out here. Let's go see what this is doing. This is moving in to a swing point. This swing point was from the trading session of back on March the 1st. That had volume of 1.2. You've done 872,000 shares. Today, let's go see what kind of volume is behind that. We'll call it 8.7. It's going to do less than about 12 million shares. And last time up, 1.2. So it's got about similar type volume. So it looks like O'Reilly Automotive headed back to test its most recent swing point from March the 1st out at about the 272 area. That's the largest dollar mover to the upside today. Urban Outfitters, though, the largest percentage mover, up 16%, gapping up today. Let's go see what Urban Outfitters is doing. Likely, and it's got pretty decent volume behind the move, 8.7 million shares. So probably headed back towards this gap area in around the $37 area. So, folks, as far as figures to be looking at here, let's watch that VIX index. Let's watch to see whether or not you get a close above 1837. With regard to light sweet crude, let's go see if light sweet crude closes below. What's that number, Johnny? Pop up on my screen. Oh, there we go. The number is $36.28. Stay tuned. Our man David White is up next. It is Terrific Tuesday, so we got the Tom O'Brien Show and Andy Heck to take it on home. Have a great afternoon. Look forward to seeing you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.